Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday. It's February 4th, day after the Super Bowl. Hope you guys enjoyed the game yesterday. It was quite interesting. Congratulations to the Patriots, Tom Brady and Belichick. They did a fantastic job here. It's amazing to see that the accomplishments that those two have achieved over the past decade or so, and especially in this day and age with the NFL, with the people coming and going with the salary caps and everything like that, and they're able to still be at such a high level here. So just amazing to watch. So let's kind of get moving into it. We don't really got a whole lot this week in terms of economic calendar. Economic calendar is kind of a little light this week. The factory orders report that we do got today, however, is actually a delayed report that was due back in December but due to the government shutdown, is now being presented now. So in October, we had a drop of 2.1% in factory orders, and forecast supposed to continue a further drop to 0.2%, and actually went a little bit further down, 0.6% in November here. Now, if you now going to headline news here, stock market's a little mixed. Dow is the only one that's in negative. The other two, S&P and Nasdaq, are actually up a little bit, and not a lot going on today. They're kind of investors kind of looking at this week. They're going to primarily look at the earnings reports, but they're also going to now that the Fed did their FOMC meeting last week and basically announced that any rate movements will be on hold until further notice. That now they're going to be kind of looking towards the U.S. and China trade talks, and that's coming up this month. Basically, the tariffs are due March 1st, so we got till end of this month until tariffs are due. So the further out we go, obviously, the more nervous they're going to get, and the markets will get a little bit more volatile. But this is where they're going to be watching basically this month to see if anything comes of it. So let's kind of take a look, see how the bond market is kind of playing out here. And as you see, the job numbers came in good. So the bond market came down. We're still on that decline. We're down about 14 basis points so far this morning. Sorry about that. We're down about 14 basis points so far this morning, testing the 25-day moving average and the Fibonacci, so that double layer right here. So we'll have to kind of see if this can hold here. It's once you go above it or after it, it's usually pretty good, strong either resistance or floor support. So we'll have to kind of see if this can hold or not. Same thing for the 25-day moving average on the 10-year Treasury. Excuse me, the Treasury is trying to make its way upwards, and it's up about I think it's around 2.72 right now, and testing its 25-day moving average. It's been kind of a ceiling and kind of keeping a lid on it, but we'll have to see if it can continue that lid or not, or if it's going to continue rising above it or not. Again, this will kind of have to play out. So if it could contain it, it will bode well for mortgage-backed securities, give it some more room, to improve or not. All right, so today rates worsened a little bit again today. Again, we try to keep to about 12 basis points before you see much fluctuations or not. But if anything changes, I'll post on my Twitter account. So if you guys want to get any updates, want to be up to date, just come over to Mike Bjork on Twitter. You can follow me there and get those updates. All right, you guys have a great rest of your day. Thanks so much for watching. I'll catch you guys tomorrow. Bye-bye.